Why I feel in the face of all the problems in the world impotent, and why I somehow cannot manage to transform I. Now here we get to the real problem, because we're always telling each other that we should be different. Now I'm not going to tell you that tonight. Why not? Because I know you can't. Nor can I. That may sound depressing, but I'll show you it isn't. It's very hard. But everybody, you see, who is at all sensitive and awake to their own problems and human problems is trying to change himself. We know we can't change the world unless we change ourselves. So when we are aware of the ego I, we are aware of this chronic tension inside ourselves. And that's not us. It's a futile tension. So when we get the illusion, the image of ourselves, married to a futile tension, you've got an illusion married to a futility. And then you wonder why I can't do anything.
Good morning. You finally have the chance to actually all tune in before I go live now. I am going to create an updated version in After Effects so you folks can actually know there's like an I'm going live screen instead of just the title of the show. So, let's actually go through the comments, or I don't know. It's been a long day. Sure, comments it is. Good morning, Lynn. You say, but everyone told me there would never be another bull run. I don't know who told you that. They don't know what they're doing. And Tokit says, am I missing something? Yes, you are missing the screen that says I am going live. But I'm here now, so fear not. Cham wants me to look at Ethereum USD, and we'll do that. Fuel, I can do that as well. Cham's son says also Bitcoin hitting some major resistances like the 55 weekly MA and 21 monthly. Are the chances this rally continues any higher? I will get to that in a second. We're going to look at our macro level Bitcoin chart and compare it to the previous bull run. Yeah, just to see how we do. And we'll actually go over what what is it called? Signs of a market bottom, or I would even go as far to say symptoms of a market bottom. It rolls better off the tongue, right? So, I'm trying to figure out how much I can say without going live. I'm just gonna go live. Let's do this. And 3, 2, 1. Let's do this. Let's get a little bit closer. Okay. We are looking at the daily Bitcoin chart, and our most important thing to do of all time is compare it to the previous crash pattern. Because what a better way to discern what we're looking at than, pairing them side by side so we can actually get a good perspective on what exactly we need to anticipate. And I am going to lit up volume candles for a change, just for a little bit of contrast there. Okay, this is massive daily volume. Largest green spike of volume we've seen so far. I think we have not sufficiently compressed to actually get out of this range yet, though. I'll show you why. From a volume analysis kind of perspective, the biggest volume spike would be here and here, but the major difference is the mass readings, because we can actually compare this huge plume of mass to this plume of mass, as they're both each the last downward leg. And you'll notice as the volatility overhead radiates upward, well, that restores the market to a state of potential energy. And the same thing happened in this scenario as well. So, if we actually look really close here on both instances of 3D wave PM, we can actually do something pretty cool. We can look at the first form of true net expansion. Well, it's actually not true net expansion because we're still getting compression of macro level periods. So, this bad boy right here, right? We can actually compare those 2 points to determine our new state of expansion. And here's why. Because in both instances we had an extensive period of compression across all periods. Then, kind of jazzes things up with a new bit of mass generated in each instance. So I would actually consider these moves similar. And I'm going to draw vertical lines just so you know where I'm pointing. Okay? Wow, horizontal lines. I'm very good at this. I didn't even... Okay. There we go. Come on. Good boy. Okay, so both these instances, you'll get the rate of PM, extensive compression on each side, and with this we have a rally of the 14 period mass up above the 0.9 value. Okay, and that does lead me to believe that when, say, the 14 period CCI does roll down, I would consider that an excellent short entry for the resulting retracement. Let's draw this out because of the compressing volatility overhead. And it is important to note that we have much more mass on the current time frame than we did in previous time frames. And actually in the previous time frames, this compression happened much more quickly because it was not as an aggressive downward move as compared to, say, this one. So we have this downward trickle, or more of a lateral move, and then followed by a downward trickle, retesting that weekly 200 MA, before the upward weighted mean period volatility and subsequent, well, bull run. I said it. There, I said it. This is where everyone wants to be, because here even an idiot can make money, and considering 95% of retail traders lose money, I could say that's a majority of people waiting for the bull run. True talent comes in being able to make money in the bear market. That's what you gotta learn how to do, folks. Because then when the bull market comes, well, you've already hedged your bets, you've already paid your dues, literally, through your previous losses, and now you're just waiting for the next set of bullish scenarios to actually take you away into the promised land of macro level gains. And I'm just gonna do this for emphatic effect, if you do so like alliteration. Goodness gracious. So really, my recommendation right now is I cannot predict what kind of price volatility we're going to be seeing on the current time frame. It's just going to be absolutely ridiculous. I'll be honest. That's not what I wanted to do. Okay. Guess we're done comparing charts. We want to take this to the BTC-USD so we can look at current price. Super. Who remembers our longest overexpanded period? It's the 250 period, which we can identify right here at this pivot, 250. So that means we adjust our distribution to the 250 distribution. Ah, there it is, our long-term mean reversion target. You know, whenever we're directly on top of a long-term mean reversion target, I have to say, wait and see. Again, I do think a 14-period CCI roll down is going to be really good in identifying swing high of trend, because in the previous crash pattern and a subsequent accumulation period, it was the 14-period CCI roll down that actually returned us to the state of equilibrium for the 1400 MA, which is also the weekly 200. Let's just load that bad boy up. Oop, there it is. Okay. So, this is great. This is initially where we called the market bottom, directly on top of the weekly 200 moving average. We provided our secondary entry, where I actually missed my long leveraged positions by how many dollars? A couple hundred. And then, well, we saw lateral mean reversion, where the mean was traveling down to meet price. And then somebody got antsy and said, hey, I want that mean reversion to be completed. And they pushed price up in a single goddamn candle, right up to the long-term mean reversion target. So, currently the way I'm playing this is I have some mid-term short positions. It gets confusing saying like long-term longs and short-term shorts, but here we are. You're still watching. Really, I'm going to probably load up on more shorts when that CCI rolls down. We cannot, and I will repeat this, we cannot start the bull run off of this candle. That is something very important for you to understand. You should not buy right now. I am actually in a pretty uncomfortable situation myself, because my portfolio is 70% tether. And if your portfolio is 70% tether, here's the downside. Do you know what it's like to be down 24% in Satoshi value in 70% of your portfolio? I'm actually up in USD value, but my Satoshi value, which is really what I prefer to value myself in, is actually taking a huge beating. I've lost, I'm not going to tell you actual numbers, it's a bad idea. I'm up, say, 7% in USD value and about 14 to 20% in Satoshi value, so took a pretty bad beating by playing it safe. Here's the thing, guys. There was really no good way to catch this, because altcoins got hit exceptionally hard, and holding in USD value hit you exceptionally hard. Your only winning scenario for this candle was to be in Bitcoin and just hold Bitcoin. That's it. And I'm not known for my Bitcoin maximalism in a bear market, right? You either trade altcoins when conditions are neutral, and then you hold Tether when conditions are bearish. Those are like the two conditions of a bear market. So when we get hit with a huge green candle like this, well, it plays out poorly for your two safest scenarios. Like, the only way to really benefit off this was to do something that's not my playbook, just hold Bitcoin, which does make things problematic for me. I don't lose money very often. Hell, I haven't been down a single month in the bear market in USD value. In Satoshi value, yeah, I took a huge hit here, guys, because I played it safe. And that's fine. I'll be taking some leveraged short positions once the right signals present themselves. And quite honestly, I just need to wait for those signals to present themselves. And right now, my only scenario is to keep on holding Tether, right? If we go down to the hourly chart, you know? But what would it be called if you bought in right here? What is that? That would be called FOMOing. FOMOing is bad. However, it's important to note we actually do have one area to compare this kind of movement to, and it was in the back of my mind, but I didn't want to burn you guys in a period of extreme price volatility. And we actually have one instance where we can consider this information. Just gotta pull back and get to that chart. Does anyone remember? I remember teaching quite a few people what a short squeeze was. And which candle was it? This candle. Beautiful. All right, buckle up. We're about to learn about price volatility. And I'm actually kind of happy I have the volume candles open for a change, because that is clean. Look at that. Look how big and green this candle is. Okay, let's talk about high price volatility. So, let's say you've been trading Bitcoin during a bull run, and you are used to huge moves like this. You're used to making 15, 20, 30% just holding Bitcoin and trading out to Tether, okay? And you're used to that. You're good at it. Maybe you're good at it. You're probably not good at it. I'm going to be honest. But what happens if you're used to these huge volatile moves and then Bitcoin decides to shrink into an 11% range for over 2 weeks? People are going to be like, man, I haven't made any money all week. I haven't lost any money all week. This is goddamn boring. I hate this. You know what those people do? They switch to leverage. They switch to leverage. And if someone switches to leverage, they're going to try. Let's really zoom in on this so you guys get a good understanding of just how brutal this was. Okay, we've got this cutie patootie tight little range right here. That's hot. Thanks, Will Smith. So, people are leveraging. Aha, I made 20% on that. Oh, I made 30% on that. Oh, I made 50% on this. I made 70% on that. Holy shit, this is great. I'm awesome at this. And people are starting to get used to looking at their charts like this. People are super zoomed into the chart, trading these wicks and candles, and like, it's a lateral range. I'll just place a stop loss outside of the range and I'll be safe, right? That's what people did. So, what happens when everyone is over leveraged and price leaves the defined range? Any guesses? Yeah. Remember this perspective. Remember what we're looking at here. Price goes up above the range. Everybody's stop loss is outside the range. Do you think there's anybody selling positions outside of the range? No, because it's in a range and they're going to short the top and they're going to buy the bottom. And then everyone up here, well, why would they sell a bullish break? It doesn't happen. You wouldn't do that unless you're anticipating a fake out, and nobody was because it was a tight trading range. So what happens? This happens. A huge green candle that happened in a matter of minutes. This candle formed in less than an hour. Why? Because stop losses beget stop losses, and since everyone was using super tight risk management, if this person's stop loss triggered, well, it pushed price up to here, and somebody had a stop loss here. And when there's stop loss, well, a stop loss is simply an automated buy, so it pushes the price up to here, and somebody's stop loss is here. So it pushes the market up here, and somebody's stop loss is here. And this keeps happening and happening and happening and happening, and then boom, right? You get a short squeeze. So this short squeeze resulted in a rather bullish move. And this is the other thing we could have compared this recent price movement to. Like, these patterns are virtually identical, which I found a little bit troubling. And I would not be surprised if these played out the same way, if I'm being honest. where we have the initial pump, the trailing FOMO, happened in both instances, subsequent dump, just a retracement value, who knows what it is, and then following buying pressure, increased price volatility for the duration, and then finally a return to the equilibrium of, well, whatever the equilibrium was at this time. I think it was the daily 200. No, daily 200 was above. What was the below value? I think it might have been the daily 500, but that's less of an institutional benchmark. So, oh Christ. I went mountain biking yesterday and I'm screwed up my back. Hit those rocky patches a bit too fast. Okay. So, really, let's go back to the daily chart just for a minute. I just need to identify something for you. I have a super low leverage short and a small portfolio, and my stop loss is around $8,000. That's not going to hit. In fact, I would even bet that we're not going to make previous highs over the previous equilibrium. Okay? That's the important note here. So when we get this bullish move, we're going to putter, run out of steam, and retest our weekly 200 values. Okay, this move had a lot more aggression than I initially anticipated. I actually had some insider info that we would pump quarter one, and I don't feel like outing whoever gave it to me. Wait, no, he bragged to me. Hold on. Yeah. I don't. He changed his username, I think. Yesterday. Oh, you trading view people can't see what I'm doing. I'm gonna do that later. Okay, folks. That's all I have for today's Bitcoin update. I don't know how high this short-term price movement's gonna go. I can identify the pivots maybe. Let's just do that, because that's something I can do on this chart. One of my favorite quotes implies that many people just trade noise without knowing they're trading noise, and they provide value to the information they're trading based on their own subjective point of view. Right? You want to be as objective as possible with this data. And objectively, I believe this to be super noisy, and I don't want to trade it. Okay, right now our longest overexpanded period is 240, which that pivot is going to be down here around 4,300. So really, I can't give you any good information today. Well, concerning Bitcoin short-term moves. Macro level, sure, that's easy. But we really need to wait for this pivot down here to expand upward to meet price. When that happens, then I'll be able to actually define pivots for you. Until then, well, it's anybody's game. You just gotta wait for it. Okay, folks, it's been a pleasure, all you trading with you folks. I'll see you later. Super. Well, let's do this. I'm super hungry. I'm gonna have my third protein shake for the day. I'm gonna be right back. Okay. Hello, everybody. I gotta say, we just hit the highest viewership we've ever had in this channel. 38 simultaneous viewers at the same time. I think it was 39, actually. Hold on, we can check. Yeah, 38. Cool. It's pretty good, fam. And this is the wrong chart template. Although, really, I would probably be better off if I just took the signals on this chart. Like, this is my baby chart. This is what I show people when I want to spoon feed them my strategy. It's this template right here. Short signal. Boom. This here, that's a buy signal. Boom. This here, that's a buy signal. Boom. This here, that's a short signal. Boom. This here, that's a buy signal. Boom. And that's nothing because the CCI doesn't roll. This one, that's a short signal. You stopped out of that one. But this one was a buy signal. Oh, you won on that one. You know what the difference is, guys? Profit ratio. When you stop out of this position, oh, you just lost 10 pips. Oh, no. Except when you took this trade, oh, you just made... let's assume you waited for trend to end. 47 pips, right? Profit ratio. That's what makes a good trader. And here's the thing, guys. I was tethered and no stop loss in a buy position. And that's what's weird about being in tether. I'm going to have to start setting stop buys in tether, which I don't like. Because the whole point of tether is being safe, and then being safe screwed me. Paxmile says, it's so weird to hear you losing sats, but honestly, it's truly appreciated. Yeah, nobody's perfect. I mean, I'm going to lose money. It's going to happen. Everybody has drawdowns. Unless I'm on the monthly timeline, then I've never had a down month, but that's different. I really should start taking more of these. Or just set up a bot to do this for me, because it's free money. Like, if I have this consistent of a winning strategy and I don't even use it because I'm too busy trading shitcoins, my god. Something wrong with me. Oreo, you're going to have to tell me to look at FBTC, but I'm not going to do any USD pairs today because they're all going to be super deceptive. Super. Check out fuel. I'm not going to try to define a retracement value on this. If you want to try to assume previous lows, go ahead, but that's the best information I'm going to give you. Yep, all the tracks are on my profile over here. I've written about 300. I've uploaded 2 hours. That's funny. Shem says, Dad Shark, the Embryo in the background is too mellow. We gotta hype it up a bit. Ethics says, disagree, keep it chill. Everyone else hypes their garbage. I like to relax and listen. Yeah. Like, crypto's stressful enough. I don't need to hype you guys. Just relax and learn, really. It's the best I can offer you. Kai Coronin, why didn't you trade USDT pairs? Because you would have outperformed with Bitcoin pairs. Or rather, you would have outperformed just USDT to Bitcoin is what I meant. How's Litecoin look? Okay, Chempson asks, can I explain how Bitcoin or USDT pairs are deceptive? Okay, let's look at this chart. Is this a bullish chart or a bearish chart? One would consider this a bullish move. That's bullish. Everything about that is bullish. Okay, well, let's look at the Bitcoin pair. That's bearish. That's a bearish move. So, just because Bitcoin is doing something bullish and carrying up the price of Ethereum, the actual Ethereum pair, well, no, it's bearish. So you want to look at how things relate in terms of Bitcoin, because otherwise you're just going to think everything is doing what Bitcoin's doing, and there's no point to that. And we'll check out Litecoin as well. Okay. See, now that's bullish, and it's bullish with the USDT pairing too. That's different. This is good. This is just trend continuation, tagging the 3.2 standard deviation on the daily. Unless this goes parabolic, I would actually not anticipate it to go any higher than right here. We're probably gonna go sideways, flag it out at this time. That's just my guess. Any final questions from you folks? I want to hear what you got to say. I got nothing. I also should tape my phone to my screen. I used to do that. I would tape it right here. So whenever I read the comments, I would just stare into the camera intensely. But, yeah, being on camera and putting on a suit, we've, like, doubled our views, so guess I have to do that every day from now on. I hate ironing clothes, so I'm just gonna take everything that are eye cleaners. I'm way too ADD for ironing clothes. Like, I legitimately believe doing nothing is easier than ironing clothes. Wow, 16% move today. That's super. We did an A and B call last night, and that's crazy. Yeah, we did a really quick position here. We did a long on this candle, and we just immediately hit take profit, and then it immediately dumped. So that's kind of what I was expecting. I mean, I guess it's just gonna keep trading in the range. That's what I'd bet on. We got some shit coins mooning. We got Bitcoin mooning. BTG's mooning. I don't know, guys. I don't really like the market right now. I mean, I'm probably gonna have to trade with like the 30% of my portfolio until Bitcoin returns to a price I want to buy it at. Because I am not buying Bitcoin right now. I'm gonna be honest. I'll buy it when it returns to the weekly 200. I might just wait to do that. Because, hell. Like, it's gonna be a big drop when we actually return to those values. Alright, think about this. We retrace 32%, right? 32% increase on how much my portfolio? 60%? It's gonna be huge, guys. So really, I know it's gonna happen eventually, so I just need to be patient on that front. You know, here's my perspective. I could buy back into Bitcoin and try to make 32% trading shitcoins. I don't have the confidence that I can do that in the amount of time it will just take to retrace. So that's my perspective. Alrighty, folks. This has been fun. I'll talk to you all tomorrow, same time, 1 p.m. MST. Really do like this video. Subscribe, comment, all that jazz. This has been Dad Shark. I need a catchphrase. I'm going mountain biking. Bye.